Hello, everybody. This is Max with Crypto Talk Now. We've seen a lot of crazy things happen recently when it comes to crypto. Some things basically just came out of the woodwork, and on top of that, like I've stated in previous videos, you never know what to expect. You could be in a bull run. You could also be in a crypto bear market in which basically many black swan events could happen. Full black swan events could very well happen. It did back in 2022 and so on. But I want people to understand that it's not necessarily just about that. It's also about what data we have here in store. And despite what everyone else is saying out there in regards to us not getting into a start of a bull run, well, if anything, you got to base things off of what? Actual data, not emotions. So without further ado, this is part 6 of this bull run thesis. We're going to get into a lot of the nitty gritty, and I'm going to give you an outline from beginning to end to back up this particular thesis. At the end of the day, I too can be wrong. I am not a fortune teller, and again, I like to basically restate that none of this is financial advice. Let's go ahead and get right into it. Smash that like button if you haven't done so already. And here it is. And like I mentioned, it's going to be quite the outline here today. And I'm also going to go ahead and zoom in just a little bit more for you guys, just to put a little bit more emphasis on some of the things you're about to see here. So, like it mentions right here, it basically states that everyone's afraid of reinflation these days. And come on, let's be honest. It's always going to be a thing, right? It doesn't matter if you're into stocks, crypto, and so on. That is going to be a thing. Well, technically, according to what you see right here, to the inflation data as measured by a gauge preferred by the Federal Reserve, the U.S. economy did experience quote-unquote reinflation in January. And I could get it, a lot of people are going to feel like, well, it's a lot longer than January. We basically saw a lot of this, throughout the year 2022 and so on. I'm just stating reinflation, big difference. Now, it says both headline and the core personnel consumption expenditures price index, which is PCE, inflation rose in January relative to December. PCE inflation rose, of course, from 5.3% to 5.4%, and core PCE inflation rose, of course, from 4.6% to 4.7%. Now, in regards to reinflation, months are a natural part of the disinflation process. Back in the big disinflation cycle of the mid-1970s, if you were around during that time, we had 4 months of PCE reinflation. None of them ended with a disinflation trend. Good to know. In the big disinflation cycle of the early 1980s, we had, of course, 12 months of PCE reinflation. None of them ended, of course, in a disinflation cycle. Now, I get it. Some people are going to say, Max, crypto didn't exist then. Again, I get all that, but it's going to help for this particular outline. Trust me. Now, this particular area, you will see that reinflation months are a natural part of the disinflation process. Kind of gives you more of that particular outline of what we talked about dating back to the 1970s. We'll take a moment to basically reflect upon this with this particular chart. And getting more into this, and credit to Investor Place for providing the info, we have to point out some key things here. Like it says, historically speaking, during disinflation cycles, we tend to get 1 month of inflation for every 6 months of what? Disinflation. Right? Disinflation, I should say. While we acknowledge that past performance is not necessarily a gauge of future performance, we have a saying around here, history may not always repeat, but it often rhymes. That's actually a pretty good statement, excuse me. Therefore, there really is nothing worrisome about the fact that PCE inflation reaccelerated in January. Disinflation cycles are never smooth, and they always have months of what? Reinflation. But those months never changed a disinflation trend, and we don't anticipate this trend diverging. And I know it seems like a lot of this is basically verbatim, but some of it I will skip. Most of it I'm just going to state I'm not, because I don't want to skip over anything I feel as though is crucial. You guys deserve to basically know about some of this stuff. And, I just want to state thank you so much again to everybody who's been part of this particular journey with us at Crypto Talk Now. Basically, we hit that milestone a while back of 10,000 plus subscribers. If it wasn't for you guys, we never would achieve that. All right, a little bit more. Disinflation cycles. Of course, we talked about the whole thing with crypto boom cycles, right? And, the 4-year cycle and how to read it, why it's so important, and so on, because a lot of us feel as though that we're basically into that particular 4th year and why it's crucial, right? And of course, a little bit more further into this outline, you will see why I feel as though that we are still in an accumulation phase. And if you've been following this, or if you haven't, doesn't matter, you will see how important it is to get involved in some of these ones at the accumulation phase. Now, while I'm not giving you official financial advice, this is what I'm personally doing. And if anything, I've stacked recently. Perfect example, and it's not part of the QFS, the quantum financial system, Jasmy. Basically doubled my position in Jasmy because I feel as though it's the right time to do it. And again, part of the particular accumulation phase. Now, disinflation cycles, like it mentions, are never short or small, but over the past 100 years, listen to this, every single major disinflationary cycle the United States economy has undergone has lasted at least, 12 months. And normally more than 2 years, with at least 350 basis points of disinflation and normally almost 1,000 basis points of, you saw disinflation. The current disinflation cycle is still both short, 7 months so far, and small, 260 basis points of disinflation, and therefore it would be unprecedented for this disinflation cycle to end now. And I couldn't agree more, right? Rather, history says the current disinflation cycle will last at least until this summer and likely into 2024, while inflation rates should fall by at least 100 basis points and likely 300 to 400 basis points. Now, in regards to the hot topic of disinflation cycles, take a look at this. They're never short or small, like it mentions. List every time inflation popped above 5%, then retraced 100 basis points since, my gosh, 2020, over 100 years ago. So you have some of these particular start and end dates, the duration. You kind of get the gist of how this all works. And of course, it mentions the S&P 500 return, plus and minus, right? And you can check this out for yourself. This is not made up figures. And if anything, it was really nice to have Investor Place give us this particular breakdown. On top of that, looking more near term, we believe that the disinflation cycle has already reaccelerated in February and that the next round of inflation reports in March will be very soft. We see some recent fluctuation. We'll talk a little bit more in regards to March specifically here in a bit. But inflation rates in this cycle have very closely tracked commodity prices. This is something that's been brought up quite a bit recently, even in mainstream news. With another month lag on consumer price index, largely because a big driver of inflation in this cycle has been supply chain disruptions that caused commodity shortages and pushed up prices, a supply shock. Perfect example, grocery store. I don't know about you, but I'm tired of paying $8 a dozen for eggs. And basically being told that, hey, make sure you come in next Tuesday because eggs are going to be $5 a dozen. Whoop-de-freaking do. Bring me back the days of 99 cents a dozen. Now, I get it. Let's face it. That's groceries and so on, but it's part of the supply chain. And I also get the whole thing about the thing with the bird flu and all that. That's beyond the point. The main thing, though, is it is part of the supply chain, and it is a supply shock. And when we have supply shocks, you're going to see huge prices, I should say, for things that shouldn't cost that much, right? Perfect example. Commodity prices were somewhat flat in January. That followed for reinflation. However, commodity prices have plunged here in February in one of their worst monthly performance over the last 12 months. The implication, of course, is that the next round of inflation reports will be much softer than the most recent round. But let's face it, the Fed will do what they please, right? We always got to keep in mind that it doesn't matter if it's a real strong year of a bull run or if it's the bear market like of 2022 and so on. These things will happen. And let's face it, like I'm going to reiterate, many black swan events and large scale black swan events. Terra Luna, FTX, Celsius, those things can happen. Voyager. Barring an unforeseen event, just like I was mentioned, that reignites inflation, we are bullish on February producer price index, CPI, PCE reports showing reaccelerated disinflation and erasing reinflation fears. Here's an example of this. You see that inflation was, or I should say, has very closely tracked commodity prices in this particular cycle with a 1 month lag. We pointed that out earlier, right, in this particular outline, but here's a representation of that on this particular graph. If you're wondering, this dates back to, I don't know, the tail end of 2015, goes back to 2016. This relationship suggests the pace of disinflation will basically reaccelerate basically by March that we're in, right? And of course, you got to give them time to give you that particular data. Just kind of like, anything we have in inflation reports, we never get it while it's happening. You get it like after the month is over. So here's that particular representation. And this, of course, on this particular source, came from Bloomberg. On top of that, fundamentally, we believe the U.S. economy's disinflation trend remains intact, and by extension, the uptrend in risk assets, including cryptos, do as well, right? Now, the technicalities of some of this, right? Things look good for cryptos. Some people feel it's not. There was some of the recent news that happened. That people are like, man, I don't know. We just saw the overall crypto market, right, tank from 1.13 trillion down to 1.02. Might have touched 1.01. And of course, some people feel as though that this was the quote unquote fake out. Guys, trust me on this. If you're this far into this particular outline, stick around a little bit longer. We'll get into some of those specifics as well. Now, we like to highlight, or at least I like to highlight, but of course, the source from Investor Place, that Bitcoin's 100-day moving average is getting very close to crossing above its 200-day for the first time in this particular cycle. The 100-day sits at 19,400. The 200-day is just about 19,700. One small rally out of Bitcoin, and the 100-day will cross above the 200-day. Now, again, for those who are still with us in regards to this particular deep dive for the bull run thesis, I want to state this much. You may be feeling, why put so much emphasis again on Bitcoin or Ethereum or both of them? Well, guys, here's the facts. The fact is, we are not into a utility run yet. Key thing is, yet. While I want to talk a lot about the quantum financial system and the ISOs and all that, we still have to recognize what is going on with the current market. Now, I am with people like Michael Cornwell and some of the other guys who stated that all this data isn't going to amount to squat when we get into that utility run. And some people feel as though that the start of that could very well be March 22nd with ISO 222. Don't get me wrong, the implementation or the mandate starts on the 20th, but the big days, is basically the 22nd moving onward all the way to, I believe, November 2025. That's not the point. You have to go based on some of the current data that we see, because Bitcoin and Ethereum still represent about 80 to 81%, I believe, of the overall crypto market. With that also said, I'm totally with some of the other people out there, part of our community, and someone who stated that, again, none of this is going to matter because it'll be the first time we have a utility run, and that data will absolutely, it's kind of like a star player putting a crappy team on its back, right? Down by 20 points and so on, and you're halfway into the fourth quarter, and then all of a sudden that star player brings the team back, and then they basically win. Hey, I'm totally convinced that very well could happen, because the utility run or a utility run has never happened before. Again, we'll get into some of those particular things as well. All right, check this out. Like you see right here, a representation of what we talked about earlier. This, of course, dates back to November 2021 to roughly, you got to keep in mind, I know that we're in March and so on, but the data to the end of February. Can't take the data of March yet until we get that all wrapped up. Now, historically speaking, every previous crypto boom cycle, and here's the juicy stuff, was confirmed by the 100-day crossing above the 200-day. Just as important, the golden cross indicator has no false signals. Every time Bitcoin's 100-day MA crossed above its 200-day after a prolonged drop, Bitcoin surged over the next several and often over the next several years. And that's the key thing here. One of the big key thing here. Me personally, I don't do a lot of this whole thing of, looking at Fibonacci lines and, retracement and all that stuff. I know some of the basics and so on, but I do base what I see off of those experts who got it right and do recognize some of these particular things, whether it's from Bloomberg and so on with these charts, right? That I will gather and that I will bring to you guys. It says, meanwhile, we are growing more optimistic on the buzzy news flow in the crypto industry these days. Of course, this past, it's not the past week, it was a while ago. But here's a little bit more. Did you know that superstar Kyrie Irving announced intentions to launch a new line of NFTs under the No Concern trademark, right? MasterCard announced it will support crypto payments for all its online merchants in real time. Spotify even got involved in this, so on and so forth. Totally different stuff, but again, just thought I would throw that into this particular outline. Now, I want to jump back into this particular thesis because, if anything, what I want to point out is some of what you're going to see right here. I'm just trying to double check that I'm zoomed in good enough for you guys, and I am. I want to bring this to you guys, and it's basically right here, and it's in regards to the whole concept of what's going on with like macroeconomics and so on, right? So a lot of people bring up these particular things because it's worth bringing up, right? Whether it's black swan events, macroeconomic things that happen in the world, you gotta recognize it, right? So it says reinflation, again, back to what I was talking about a little bit earlier. Fears will become renewed. Disinflation hopes as the next round of inflation reports in March show large drops in headline rates. Again, we're still 6th day into March, if I'm not mistaken. But yes, shows large drops in headline rates. Hawkish Fed commentary will turn increasingly dovish as soon as inflation prints ease, in which the central bank's anxiety about whether or not its rate hikes are working, right? And let's face it, a lot of times when they feel as though it's not working, what do? Jerome Powell and the Fed come out with another particular plan, whether it's 25 basis points and so on. Just all depends on their particular previous month's reports. And it's kind of like, they're treating the economy like a guinea pig and see what works and what doesn't, right? So let's get further down into this. Macroeconomic headwinds will likely become economic tailwinds in March, even though we're not completely done with March. As they do, cryptos should rally. I feel as though that very well could happen because I feel as though, kind of like what I mentioned earlier, you're going to get some of those particular crashes, you get a pullback, still part of that particular accumulation phase. And then if anything, especially with ISO 222 mandate coming out, man, that in itself could put the entire crypto market on its back for blast off. Now, don't get it twisted, as the saying goes. There's a difference between a big crypto bull run and on top of that, a big like a run up to that point, right? Or AKA difference between ATH, all-time highs, and so on. I don't feel as though we're going to be entering into all-time highs for crypto like anytime soon. But again, the start of that particular bull run, keep in mind, accumulation phase. And again, we'll get into that particular outline here later in the video. Now, the fundamental outlook aligns with their particular technical outlook. Again, this is data brought to you guys from various sources, Bloomberg, Investor Place, and so on. Most of the charts are from Bloomberg, though. Bitcoin, of course, appears to be putting in a short-term technical bottom. That's crucial. The crypto is at the bottom end of its 2023 uptrend channel. Now listen to this. In regards to RSI, Relative Strength Index, reading of about 40, exactly where it was when it put in a significant, significant local bottom in this channel back in early February. And of course, we saw that. Some of you guys saw it in the market and so on, especially been following us. The $22,000 levels look like a significant short-term bottom in Bitcoin, and consequently, it looks like a great time to buy. There's, of course, a lot of cryptos that I feel as though were a great time to buy. I basically just got recently into Cypherium. I also got into Casper. And of course, I bought more Jasmy because I felt as though great time to buy it. Yes, these were particular examples with Bitcoin, but you kind of get an idea that when, as the saying goes, if these do well or if they have a pullback, a lot of times that's part of the accumulation phase, right? So like it shows right here on this particular chart, Bitcoin looks like it has reached a technical short-term bottom. Great buying opportunity. I'm not giving you financial advice, but again, this is what a lot of people are doing. That's is exactly what they did, of course, with Investor Place yesterday for the first time in about a year. They issued new buy alerts. They even add Filecoin to the list. I've been talking on the live show a lot about Filecoin. I've been thinking about personally going all out on Filecoin and then doing what I like to call a power swap. I'm kind of stuck in the road on three particular ones to do what I would like to call a short-term power swap. So I'm going with either Filecoin, Polygon, right? Matic, I talked about that in a previous video if you happen to see that. And then the other one I'm really looking closely at is Stratos, which is not, of course, as big of a market cap as those other two that are in the top 100. But man, at 42 cents, for me personally, yeah, I'm going to go all out on Stratos. If I see it drop back to 42 cents, that is my trigger to get into that. And I know I haven't done, deep dives for guys in regards to Stratos, but we'll give a special shout out to one of the members of the community, XXI Gaming, in regards to Stratos. He did very well with it. And it's one of those ones that is literally a good bi-weekly or slash bi-monthly swing trade. And so for me, if I can go all out on one particular one like that and then do what I call like a power swap, because let's face it, you're not going to get charged in taxes in regards to power swapping. You only get charged in taxes if you cash out, right? So do what they call a power swap, and then I go after more of these from the quantum financial system. That's just what I personally do. We all have other ways of doing it. Maybe you guys have buy and sell orders, bots, whatever the case be. Give me just a second. Excuse me, didn't want to cough into the mic. All right, so it is significant. That's why they waited, so long for a reason. They chose to act this week for a reason. They think there's a significant short-term bottom and a long-term uptrend for cryptos, right? And that's the way I feel personally as well. And of course, there's more that goes into this. It says that the recovery path for cryptos in the new boom cycles tend to be choppy in the first year, then explosive in the second year. And of course, I get it. This is why a lot of people feel as though, 2023, there might be money to be made, but 2024 should be huge. This kind of further backs it up, but don't get it twisted, right? As the saying goes, there is still money to be made in 2023. And that's one of the key things I want to highlight. I get that a lot of people are stating that, no, there's no money to be made in 2023. That could be furthermore from the truth. You saw a few particular projects go to recent all-time highs. One particular example, right? It was, and I know it's a degen play, but, shout out to the Tonic community, right? Tectonic. We basically saw that eat like, a zero. I want to say all-time highs, but it was up over like 100%. We saw other particular projects do very, very well. Conflux, some of these other ones, right, went to all-time highs. Now let's jump back to where we're getting with some of the data here, and we need to. So it says we think one will be similar in regards to an explosive first and second explosive second year, I should say. And that is looking at a choppy 38 to 50% Fibonacci retracement in Bitcoin in 2023. Again, I'm not into the super technical details of that, but I can recognize data. And it says basically that would bring us to 35,000, 40,000 levels. Some people feel it's like, well, big whoop-de-doo. It is a big whoop-de-doo because, you can't just base everything on just all-time highs. You also have to recognize that, the data shows that this is the beginning of an actual bull run. And you may not feel as though 35,000 or 40,000 is bullish. It definitely is, because if anything, previously speaking, right, in the previous bull run, we did see 69k Bitcoin, right, 11/11/2021, and also saw, was it 4,500, maybe higher for Ethereum, all-time highs for that. So that should follow a near vertical explosion to 100,000 in 2024. Some people, of course, other content creators, you've seen them. I don't need to mention their names. They got even higher than that, 200,000. Does that mean I'm endorsing for you to go out and buy Bitcoin? No. Me personally, I feel as though the opportunities definitely with what? The ISOs, especially. And don't get me wrong, there's other ones that are part of the quantum financial system, which is this video's for the most part focused on, and so on. And we'll get, of course, more into that. But, like Polygon's part of that, right? It's not just all about the messaging standard of ISO 222. It's understanding what ones have utility. And of course, most of the ones that we cover here at CTN are utility-driven cryptos. Of course, we talk about Volt and stuff like that, and some other meme coins. But the main focus is we do like to bring you guys the ones that have utility, because we feel as though that utility is what will be around for the long term. So therefore, the strategic going forward, or I should say strategy going forward, is pretty simple. Buy high quality, just like I mentioned, all coins, right? Ones with utility on sharp pullbacks in a BTC to support trendline in 2023. Pile up on profits as cryptos grind higher in 2023 and cash out for huge gains in late 2024 as cryptos make new record highs. Again, the key difference, 2023, start of the bull run, having a bullish momentum like you saw there, as much as 30, 40,000 for BTC and so on. And then from there, understanding that the big standout real bull run will be 2024 for what? All-time highs, right? Now, not quite done yet. Excuse me. They want to cough it to the microphone. All right. I want to reiterate some things here that are crucial. Understanding not just these boom cycles, right? But the accumulation phase. Now, check this out. Accumulation phase sentiment. The worst is behind us. Is it? Is it really behind us? Because some people, of course, feel as though, there could be other black swan events, tether crashing. All those things could happen, no matter if it's a bull run or a bear market, right? We know that. But look what it states here. And actually, this source, you guys may be familiar with it, especially if you hold ledgers, right? This actually comes from ledger.com. I thought this was a great outline for this particular deep dive in regards to the bull run thesis of 2023 going to 2024 and so on. Accumulation phase settlement, the worst is behind us. Another title for the accumulation phase might be, like what I just mentioned. That is because normally it follows a significant market crash. We saw some of that recently. Going from 1.13 trillion to 1.01 trillion or 1 trillion even, that is significant. And is generally the moment when the market starts turning. Key thing is turning, with a key group of big traders confident that prices will hit their absolute bottom and can only get better. Characteristics of the accumulation page. Again, some of you guys, even if I was just coming into this particular time in crypto, I wouldn't want to know about the accumulation phase. I want to learn all about it, right? So it says trading activity during the accumulation phase is moderate and prices may even be subtly increasing in line with the first green shoots of confidence in the market. On top of that, when I look down like that, it's because I'm double checking I'm not muted. Anyway, big traders accumulate. An interesting phenomenon occurs during accumulation, and this, if you don't believe it, look into it if you want. It's proven itself time and time again. And that phenomenon basically is when the market splits into two camps. Listen to this: the glass half full buyers, right, and the glass half empty sellers. Basically, what happens is that many long-term hodlers, feeling that they've lost faith in the market, are looking to sell their positions and probably offering a low price on their assets to match. I hate to mention this. Perfect example is what what's happening in Luna Classic. Me personally, I still hold a big position in Luna Classic. I have about $4,400 invested in Luna Classic. Maybe some of you guys feel as though, why don't you talk about Luna Classic as much and so on? It's mainly because I feel as though, from a content creator perspective, it's very oversaturated, right? Perfect example, also Shiba Inu. I would love to talk about Shiba Inu all the time, right? I turn 8K into 88K Shiba Inu. Why would I want to talk about Shiba Inu? Again, perfect example also. Content creator saturation point. So we do like to cover ones, it's a use of our time, like for instance, I came out with that recent video about Affinity Coin. Only got like something like 50-60 views, put a lot of time into it and so on, making the editing and putting out the video and so on. So I hope people understand that just like with crypto, it's kind of like supply and demand. We're going to cover Quant, we're going to cover Jasmine, we're going to cover some of these other ones from the ISOs and the QFS and so on. Why? Because it might be niche markets, the QFS. But getting back to the topic in regards to a lot of this, and basically what you see right here is that many long-term hodlers, like it states, feel as though that they have lost faith in the market and are looking to sell their positions. On top of that, like it says, it's probably offering a low price on their assets to match, but meanwhile, market pioneers and whales with a vision, those who see the slump just as ones who are part of that phase of the game, take advantage of these low prices and start specifically doing what? Buying. Confident that the market, of course, will soon recover. The consequence of this, and here's one of the key parts, is it's a huge transfer of assets with a significant portion of the market ending up in the hands of just a few movers, hence the name accumulation. Let's talk specifically about this right here, and that is the huge transfer of assets, and also, of course, ending up for the first few movers. How do we know that? Well, let's jump over to this right here, and that is basically Whale Alert, and of course they have 2.2 million followers. And the nice thing about Whale Alert, if you're not following them, is they have all this stuff that you can track for, whether it's Ethereum with Etherscan and some of these other ones, right? You can absolutely just go in and track it. So, we're talking about the QFS, right? XRP is definitely part of that. It's one of those ISO 222 cryptos, as we know, right? Look at this. 2 hours ago, did you know that 34,096,971 XRP, which is worth 12.3 million US dollars, was transferred from Binance to an unknown wallet? Why am I mentioning some of these things? Because I want to pound it home a little bit more in regards to understanding this particular bull run thesis and the accumulation phase that is so crucial for part of the research of this outline. On top of that, a little bit more in regards to this, not XRP, but Binance's USD. 99 million, well, let's face it, about 99 million BUSD, worth about close to slightly under 100 million US dollars, was transferred to an unknown wallet to Paxos Treasury. Paxos basically made recent news, a couple weeks ago? Remember the whole outline with that? Maybe you do, maybe you don't, but they definitely made recent news. On top of that, how about Polygon Matic? 3 hours ago. Again, Matic's part of what? The QFS, right? 5 million Matic, which is 5.6 million US dollars worth of Matic, transferred to an unknown wallet to Binance. And of course, you could track it right there. On top of that, a little bit more in regards to Binance. But how about this? Some of the, even stable coins, right? I know BUSD is a stable coin, but how about another one? Circle's USDC stablecoin. Close to $99 million worth of that transferred from Justin Sun to Binance. 3 hours ago, a little bit more for Justin Sun. But how about this? Let's go further down. Bitcoin, right? We're always got to talk about Bitcoin. 112 million, 112 million 70,049 USD worth of Bitcoin, which is 5,000 Bitcoin, transferred from an unknown wallet to another unknown wallet. And to reiterate a little bit more, how about get back on the subject of XRP? 13 hours ago, 51 million XRP worth $18.8 million transferred to Bitso from Bitso to an unknown wallet. And again, a little bit more in regards to XRP. You can see on the screen for yourself. Again, the key thing here is a few from the QFS, Matic, XRP, and it's consistent here, guys. What's happening? Lots of XRP transactions, whale alerts, big stuff. Why is this important? It's important because we want to basically bring you this that's part of the accumulation phase. And as we know, kind of like to reiterate a little bit more, the accumulation phase is marked by, of course, a recent crash, negative but gradually changing sentiment, and moderate trading volume. The market value overall stays the same, but much of the asset is accumulated by a small group of big traders. And you've basically seen that with what you saw on Whale Alert. Now, how about this for size? We got to mention this for just a brief moment. The market cycle, phase 2, the market phase. The accumulation phase is generally followed up by the market phase and regular market life cycles. In this phase, price action moves into a long-term consistent uptrend. Sentiment becomes decidedly positive, therefore interest in the market, and therefore its overall value. Since people are willing to pay more, it grows. What's a perfect example of that? FOMO. How do we know it's going to happen? You better believe it does. You know, how many people basically came into Shiba Inu when they saw all-time highs, right? When it was Shiba Inu went to 0.4088 or 89, something like that. Bitcoin on 11/11/2021, 69K. How many people bought the top of the mountain? Because I heard the mainstream news. Oh, I got to get in on that. Ethereum, all-time highs at that particular date as well. I got to get in on that. But FOMO creates that type of thing. Now, there's, of course, a little bit more in regards to the sentiment, greed trumps caution. I'm not going to mention that part right now. I want to get a little bit more into this whole thing of FOMO. So, heated market rises prices. This positive market sentiment peaks during this time. The majority of traders are optimistic about the future and are therefore more likely to take risks. And it's very, very true. Here's a perfect example, even with myself. I'm literally thinking about, like, do I go all out with Polygon and do like a power swap, as I would say, or said many times on the live show, probably at the beginning of this video, I can't remember. Like, there's literally 3 that I'm looking to do. Filecoin, Polygon, and on top of that, Stratos. Shout out to XXI Gaming, who did very well with Stratos. If Stratos drops down to 42 cents, I'm all in. I'm telling you flat out, I'm all in at 42 cents. Because if anything, with how much I'm looking to put into it, I could basically yield anywhere from $3,000 to $6,000 for the month on that particular trade. Now, that's not financial advice. That's just what I'm looking to personally do. And then from there, do a power swap into more of, I don't know, stacking up on LCX, some of these other ones from the QFS, XRP, XLM, XDC. You get the gist. But look what it says here. Positive market sentiment peaks during this time. The majority of traders are optimistic about the future and are therefore more likely to raise or take risk. I should say raise. When we talk about FOMO, this phase is generally when it happens. Excitement means buyers are willing to pay higher than normal prices for assets. Just a little bit like what was mentioned earlier. You know, you have all those people, or that meme that you guys have seen. I'm sure you've seen it. Everybody stands in line for, let's throw out quant. Let's throw quant into the mix. You know, not a lot of people stand in line, of course, for $122 quant like it's at right now, right? 125 or even 150. But everybody stands in line for, give me some of that quant at $1,000 or $10,000 and maybe even $100,000 in the future. Or how about this? $1,000 per XRP, 10,000. You get the point. Crypto market cycles, phase 3, the distribution phase. Now, of course, this is the next particular phase. I will mention this real quick. So it says the distribution phase marks the end of the bull run in the market and can be characterized as a best is behind this attitude is especially significant among the first movers whose selling activities help to catalyze a shift throughout the market. Perfect example, and again, you can look it up yourself. The end of 2021, you saw all-time highs. Then, let's face it, we got into the beginning of 2022, and you definitely see the market going from a bull market to the start of a bear market, right? And this is, of course, at least about 2 months before what? Before the start of the Russia-Ukraine war. And I believe also at that time, if I'm not mistaken, you even see a little bit of Elon Musk selling some of his shares of Bitcoin, right? Don't quote me on the exact months, but I do remember that. Again, it further solidifies, like it says, whose selling activities help catalyze a shift throughout the market. Whales control that particular shift. All right, of course, there's so much more in regards to this outline from Ledger. Shout out to them for providing it. I was glad to bring you guys the info from Whale Alert and so on. I want to get to this particular part, and if anything, it's going to further, solidify this particular bull run thesis. In my opinion, you can still disagree with me, and that's okay. Bitcoin's accumulation rate exceeded the 2018 bear market. Can Bitcoin pull a substantial bull run? And if anything, this particular article was released basically 6 days ago, so it's still pretty recent. Now, it says as Bitcoin fluctuates modestly from its levels of the last week, of course, from the first, certain on-chain metrics indicate that the next 2 years could be highly bullish for, let's face it, the largest crypto out there, Bitcoin. And of course, that will potentially lead to new all-time highs. I'm not saying it will, but based on data, and man, this data is pretty strong, right? So it says, according to a recent crypto analytics firm, CryptoQuant, not to be confused with actual Gilbert Verdian's Quant, right? Not the same company. Observation, Bitcoin's current accumulation rate is higher than the 2018 bear market, way higher. Since Bitcoin hit 69K, like we mentioned numerous times in this video, and the bear market began around a year ago, the crypto sector has been met with several anticipated challenges, such as the pandemic, fears of inflation, and on top of that, the Russo-Ukrainian conflict. This has caused the financial markets to be dominated by doubt and fear, leading to severe deleveraging. On top of that, as per the firm, the lengthy bear market has caused substantial buildups of coins, evident from the realized UTXO bands. This metric shows coin groups based on their lifetimes and their share of the total realized cap. Currently, the metric indicates that the number of coins with a lifespan of more than 1 year has grown steadily, resulting in a large amount of market accumulation. A little bit more reiteration of what I was just talking about. And here's a particular example of what you see here, the 2018 bear market's final phase. And of course, this goes all the way to January 2023. And look at this particular quote. Even though the price dropped significantly below 20K recently, the accumulation rate appears to be higher than the previous bearish phase of 2018, suggesting that Bitcoin remains a valuable asset for many market participants. Once the market has reached a long-term bottom, it will undergo a substantial bullish run, wrote the firm. And that's one of the things I believe as well. I base things on actual data, not base things just on an opinion of a few, nothing against them, content creators and so on, right? I'm not saying that like, oh, well, you, Max, are the guy that has all the answers. No, it's not like that. But I do really base it off of data because at the end of the day, as the saying goes, numbers don't have emotions. All right. On Thursday, as in, I guess last Thursday, stated that popular pseudonymous crypto analyst Ali also shared a chart which shows the 7-day moving average Bitcoin PWL multiple has hit a 14th month high. Let's get into that for just a brief bit. Here it is. And this dates all the way back, of course, 2015, but look at the significance in regards to 2018 and compared to where we're at. And if anything, I mean, man, look at where it shows in the yellow for the PWL. It's something else. That's all I got to say about that. I mean, whether you can follow it or not. jump back into it for a second. The Puel multiple, if you're wondering, is a metric that calculates the ratio between the daily earnings of Bitcoin miners in US dollars and the 365-day moving average. The metric has been used to identify Bitcoin bear markets, as miners are always subject to the same costs, such as electricity, right? Therefore, their actions are somehow connected to the price of Bitcoin. Now, hear me out on this, right? This is good stuff. Comparing miners' short-term revenue to their 365-day average, Puel multiple reveals the miners' future behavior. Since November 2022, miners' revenue has doubled, indicating that values above $1, or I should say not dollar, 1.00 signify potential future price increases. This may cover mining costs and reduce the need to sell Bitcoin, hence lessening selling pressure. You know, and here's another perfect example. Why do we track activity of, like certain cryptos where it says how many people are buying that particular ratio and percentage, or how many people were selling? Shiba Inu. Remember when Shiba Inu, even currently speaking, right? I think it's still one of the best ones out there when it comes to having most people who buy hold, right? That particular ratio, I believe, last I checked was something like 78%, 80%. How about this? I think about a month ago, I reported on Quant how you have basically 95%, if I'm not mistaken. It might fluctuate a little bit, but even if it dropped down to 90, that's okay. 90% of Quant buyers are holding for long term. Those are great stats because, if anything, part of the accumulation phase, and understanding that just because you don't see significant price action for those particular assets, it strengthens the asset. We'll get a little bit more into some of just that. The strengthening of assets, the sideways consolidation of certain cryptos, and why it's so significant going into a bull run. And let's jump actually into that right now. So as you can see right here, this is the top QFS, Quantum Financial System, coins and tokens. And of course, you have many of those particular ones that are part of ISO 222, like XRP, but you have ones that aren't, like Matic. But yeah, check this out, guys. I mean, as we know, you have what you see on the 7-day chart, so on, but it's not about really so much of that. It's actually about what you see right here. XRP is basically at 36 cents, but it's consistently hovered at between like 34 cents to 40 cents for the longest time, not just a few months, but like literally like over a year and so on, right? On top of that, let's jump down to Stellar. As you guys may know, or if you watched the live show, I mentioned that I doubled my position a while back on Stellar at these particular prices. I think it came in at roughly 8 cents. And look at what you see over here. Even on the last 7 days, I mean, it may look like it's really significant on the drop, but it's not. It is a lot of sideways action for the most part. Hedera's H-bar, I think that's an exception, because we saw more tokens entering into the overall supply. That's going to happen. That's a great long-term play. But let's jump further down to here, right? I know we always talk about Quant. We see Quant at 123 and some change. But how about, for instance, Casper? I recently got into Casper, and I'm so glad I did so. So with Casper sitting at roughly a little over 4 cents, a lot of sideways action. And I know that a lot of this, of course, is just based on 7 days, but I mean, XDC is the perfect example. I mean, you do see it's up about 10.5% for the week, but with XDC, it's been hovering around an average price of what you see here for over 9 months. And other content creators, shout out to Rich of Common Sense Crypto. He's posted a few times that he feels as though that this one is just absolutely going to take off, and I believe that way as well. Why? There's something about the particular asset trading sideways. It strengthens the asset, and watch out, things will explode. If we're in accumulation phase, it creates a pressure cooker effect, if you will, where just like as the saying goes, right? Think about a pressure cooker in itself. You keep putting stuff in that particular pot over and over and over and over again. Boom. That's why people say to the moon, so on and so forth. But I mean, I know this is not part of the QFS, but Shiba Inu. Shiba Inu in 2021, we saw from May of 2021, when it reached significant all-time highs, first big all-time highs for Shiba Inu, and then went from that to what was it? You know, October, I believe, of 2021. So it was a little over 6 months. It was sideways consolidation, and people flooded that. People said that, this is a garbage token. It's not going to do anything. And that was the biggest standout one for 2021. My point is this: you guys know what you hold. You should have done your research by now, right? And of course, we help you with that. But I mean, come on, guys, XRP. I mean, this whole thing with ISO 222, this mandate coming out roughly March 20th, March 22nd, and roughly in that particular area, we should see volume start kicking in. I'm not stating that you should see like huge prices, like literally of that day and so on. But there's one thing about like not having utility accessed, and there's another thing about having, like, as the people say, the flip of the switch. Well, just because we get the flip of the switch, it's also like getting the utility implemented. We will see the start of that utility being implemented. And when you see these particular stats right here, for instance, like this one, XRP, 937,999,000, that is close to basically $1 billion worth of volume, right? Can you imagine what the volume is going to be like when you have a taste of the financial sectors basically tapping into what? That on-demand liquidity. There's something to be said about that. The same will apply with Stellar, because as we know, Stellar will also move just like how XRP has moved, and it's proven itself in the past. But you will also start seeing some of these other ones, and especially with Quant going into the month of June, right? With like these CBDCs and so on. We already gave you guys quite a few different ones on our particular outline that gets into that. But some of these other ones are going to move with it, like Casper and so on. XDC definitely will move with it. I don't believe that Casper will move immediately, like right with XRP, XLM, and Quant, but I do definitely feel as though XDC, again, is part of that whole sideways consolidation, right? The pressure cooker effect. Because we've seen so much consolidation, it is ready to absolutely pop off. I firmly believe that. Of course, there's some other ones that are part of this mix, right? I mean, I know some of you guys are into Energy Web Token. I mean, there's a lot of great ones here. LCX, a lot of people feel as though that, wow, I mean, LCX, it might be the last one standing when everything is said and done as far as a legitimate exchange. Could very well be so. I'm not rooting for that, for any exchange to collapse and so on. But, sitting at 10 cents, I mean, I know some people got into it for much cheaper, around 3. But, I mean, a lot of these, I mean, I know that we're waiting for a proper listing for Nexera, ALBT V2. But the key thing here is this, guys, is knowing what you have and what you hold in regards to this particular list of the quantum financial system. That's one of my key things, and that is why I'm so glad to be able to cover some of this, because you may feel as though, well, Max, you cover this particular outline, can you give me a little bit more? Well, here's the icing on the cake, and that is this right here: the 4 phases of the crypto market. And again, this is part of crypto.com's educational area of their university. Call it crypto.com/university. This accumulation phase. Let me jump back to this for just a second. So, I want to show you, this real quick. So we went through here, this, and you gotta keep in mind, I mean, we could do like the year stats for a lot of these, but I guess we will. Let's just take a brief moment before we wrap things up in regards to XRP. So with XRP, we could do like the 1 year. Look at that. Look how healthy that 1 year is. So from, hold on a second. Let me actually just type it on that one. So you may think, wow, this is really, really down. I mean, I know that other one looked a little more impressive, but yeah, I mean, here's where it really actually starts. So you have, and let's face it, when it came to May of 2022, this is the direct result of, the collapse of Terra Luna. But even with that said, you had roughly anywhere from 32 cents to like 40 cents roughly for this particular asset. And it's still at that. That's the key thing I want to point out there. On top of that, just to kind of reiterate some of this, I want to show you Stellar real quick. And if anything, I apologize for the the noise in the background and so on, but I already went in and edited this video like 3 times. Anyway, I want to show you this real quick, and that is on the 1 year. And look at this for Stellar, right? Again, look at the date, 5/12. That's basically my birthday. But look how consistent is basically from like the 8-cent range to what you see with the 12. Again, sideways consolidation. It's not a perfect sideways consolidation, but it's that particular range. It's that consolidation range is the point I'm trying to make. I'm going to pound it home just a little bit more. Let's jump down to not quant, but actually XDC. Okay, XDC is again the perfect example in regards to this. This should be around the 5s, if I'm not mistaken. So yeah, this one is like the 4-cent range. And you kind of can see, you've seen this, right? It basically averages anywhere from, slightly under 3 cents to the 4-cent range, right? I'm telling you flat out, look at the volume of some of these particular ones. Yeah, it currently is down a little bit right now, but, slightly under 3 million in volume. This is part of the trade sector. I'm just being honest with you guys. I feel as though that when you hear these talks about a true utility run, understand what you see here, understand what we brought you on this particular outline. It's the accumulation phase that we're in right now. And as you can see right there, after that is the markup, right? And of course, soon after that, maybe it is 2024, maybe it is the end of 23. I don't know, but it could very well be 2024, right? But that's where you get into the whole markup phase to go to, as people would say, the moon for blast off for all-time highs. And why in the world would you want to wait to get up to the markup point? No, you want to get in right before it starts doing that. You're still in this accumulation phase. But if anything, with ISO 222 mandate coming out very, very soon, towards the end of this month, I feel as though people are running out of time. As the saying goes, you're going to get priced out of quant and so on. And I'm looking at Jasmy, and I basically have doubled my position in Jasmy at 0.0055, whatever number it is. I just literally went from 100,000 Jasmy, 200,000. I know that's not part of the QFS, but again, it's the accumulation phase. So guys, that is it in regards to this deep dive in regards to the part 6 of the bull run thesis. Glad to be able to present it to you guys and bring it to you as well. Let me know what you guys think in regards to this. Am I just completely off basis here? This is just a bunch of malarkey. Are you just gonna base things off of the emotions of other content creators and so on when they all hop on the bandwagon of no, it's not the bull market because that's the popular thing to do? Or are you going to actually look more into some of this when it comes to the accumulation phase and understanding these particular boom cycles to support a bull run thesis? Thanks again for watching part 6 of this ongoing series for the bull run thesis. And if you want to check out a live show, 9 p.m. Eastern, 6 p.m. Pacific, every single day of the week. Thanks again for watching. May y'all have a blessed day. We'll see you on the next one.